everybody. Welcome to today's fundamentals. Hello, Peter.
Hello.
How have the markets been behaving?
Well, we had slow volatility in the markets. I think the main characteristic of the market yesterday was the weakening of the US dollar after 2 or 3 consecutive days of strengthening. Yet I would be noting that there's still high recessionary worries in the market, as on the one hand, the market is increasingly pricing in the possibility that the Fed will be slowing its rate hike path in the December meeting next week, where the bank is expected to hike rates by 50 basis points. But on the flip side, it seems that it's also expecting that the higher rates will be in play for a longer period. And that may tip the US economy in a recession.
Mm-hmm.
I think that we may see that more or less definitely weakening US stock markets as it did yesterday. They edged lower for the third consecutive day. On the flip side, though, we saw also gold's price being on the rise. And definitely that was also related with the fact that US yields tended to ease and lower. We had the 10-year yield, if I'm correct, reaching 3.45%. So overall, for the time being, there is an uncertainty simmering under the surface. In my opinion, that could lead to more safe haven inflows for the USD should that intensify further.
Mm-hmm. Didn't we also have BOC's interest rate decision yesterday?
Correct, we did. Bank of Canada practically hiked rates by 50 basis points.
Mm-hmm.
That was on the high end of the expectations of the market. Actually, we had warned about this possibility yesterday. I think the big surprise was not on the rate hike as such, but on the accompanying statement. In the bank's forward guidance, the bank up until now had always mentioned that it sees the need for further rate hikes, etc., 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 which more or less foreshadowed that more rate hikes are to come and the tightening would be continued. In the last meeting yesterday, in the accompanying statement, the bank stated that it will consider whether more rate hikes are required or not. So practically, we have here an element of doubt, which definitely is more on the dovish side. On the flip side, though, we have to note that the bank also continues with quantitative tightening, which is another element which more or less tightens monetary policy further. Overall, I would say that the bank's decision may have been more on the bearish side rather than the supportive side for the loonie yesterday. Of course, we have to understand here that the Canadian dollar, it was also negatively influenced by the market's cautiousness, as practically it's considered to be more of a commodity currency given to its positive correlation with oil, as Canada is a major oil producer. And definitely the drop of oil prices may have also have had a negative effect on the CAD as well.
Mm-hmm. And how about oil prices?
Oil prices dropped for a third consecutive day. I would note that market worries for a possible recession in the US economy tend to create worries about the demand side of oil. On the flip side, we see that also we have China, which is easing its COVID measures and in turn could provide some optimism about the demand side, as practically that would induce greater economic activity, thus more oil consumption by China. It's a tricky situation here. And I would be noting on the flip side that we had worse than expected trading data from China for November. And that tended to imply that the export-oriented economy is slowing down once again. So it's still unclear where China is heading to. Should COVID measures ease substantially, that would definitely be a positive and could be a reboost for the economy on a global level. On the other hand, we have to note here that COVID cases in China are increasing. And that may force the government to push back against the idea of easing further. So I think we are in a make or break position right now.
And what's on the calendar for today?
Well, it's an easy Thursday. We don't have much. But I would be noting from the US the weekly initial jobless claims figure. It's expected to rise slightly from 225K to 230K. And if actually so, could weaken the US dollars. That would imply that there's still an increasing number of people which are losing their jobs in the US. I would be noting also later on from New Zealand the electronic card retail sales. And the growth rate, should that accelerate beyond 1% month on month, that could provide some support for the Kiwi. That would imply that there is a greater degree of availability for New Zealanders to actually spend more in the New Zealand economy. Other than that, during tomorrow's Asian session, we're getting from China the PPI and the CPI rates. They are for November. I would be highlighting actually the PPI rate here, as the producer price index is expected to drop deep into the negatives. And if that's the case, that could spell trouble for Australian exporters of raw materials, as the Chinese would be pressuring the suppliers for lower prices further. Mind you that also the CPI rate is expected to slow down, and that could be limiting the profit margins of Chinese manufacturers, but still, I think that's tolerable.
And how about the monetary front?
On the monetary front today, we have ECB President Lagarde speaking twice. The one would be pre-recorded message. The second would be an attendance in Frankfurt. I wouldn't expect much here. On the other hand, we have also BOC Deputy Governor Kocinski. Now, should she expand on this hesitation, which was expressed at BOC's accompanying statement yesterday, that could weaken the CAD. On the flip side, should the BOC Deputy Governor actually provide more confidence, that could be providing some support for the CAD.
Interesting. Any final comments?
Well, it's going to be interesting once again whether the losses of US stock markets will be expanding. We had some hesitation actually yesterday for US stock markets. Definitely the news that Twitter is about to be charged up around 1.2 billion US dollars in interest is not good, could weigh on the market sentiment. And overall, for the time being though, we still remain bearish for US stock markets.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So, welcome to the technical analysis part of the presentation for today. My name is Peter Yosef, Senior Market Analyst at IronFX. Now, in front of your screens, you have the US dollar index. It's the 4-hour chart. Mind you that all charts to be presented today are to be of the same time frame unless otherwise stated. For the time being, we note that there is low volatility for the US dollar index. It maintains a sideways motion, practically revolving around the 105.25 support line, with sometimes being lower, slight rise, another drop, and overall a sideways motion, which is expected to continue, given also that we have the RSI indicator below our 4 chart, which remains near the reading of 50, implying a rather indecisive market. On the other hand, should the market sentiment remain cautious or even intensify towards a risk of direction, we may see the US dollar getting some safe haven inflows. In which case, we may see the US dollar index rising and starting to aim for the R107.15, which provides some resistance once here, twice, 3 times. So it's a pretty bad level. I would keep that. On the flip side, should the bears take over, we may see the price action breaking below the 105.75 clearly and aim, if not even reach or breach, the 103.50 support level. A support level which practically, let's go back and have a look where it actually rests on, and it rests on these shows here, which were practically in June, mid-June and early July. Yep, 16th of June here and 27th of June, sorry, mid to end of June. Once again though, main scenario which is expected to play out is a sideways motion with the price action practically revolving around the 105.25. Let's have a look at Euro USD. A similar picture. Once again though, we may see that the price action yesterday lowered the S1. I think this is more representative of the sideways motion. And we're talking about the 1.0460. Overall, the volatility remains low. And you can see that the euro took advantage of USD's weakness here yesterday. But the correction lower during the American session, late American session, and consecutive Asian session volatility is very low. So we tend to maintain the bias for sideways motion to continue, probably between the 1.0460 and the 1. Let's place this correction, 1.0605. Also note that the RSI indicator is running along the reading of 50. Once again, reinforcing the idea of a range-bound movement. Should the bulls take over, we may see the price action rising, breaking the 1.0605 and start aiming for the 1.0785. On the other hand, should the bears take over, we may see the price action dropping, breaking the 1.046 clearly. We would require a lower throw than this one, and start aiming for the 1.0295, a level which was tested. Let's have a look once here at the end of November. Once again here, here, and here. So that was multiple. There were multiple attempts on it. And despite the breaking here, even temporary one, it seems to be holding ground. So we tend to maintain the view that the 1.0295 remains rather solid. On the other hand, once again, the RSI indicator which remains near the reading of 50, the convergence and the narrowing of the Bollinger Bands, all of that tends to imply that there's low volatility in the sideways motion, probably between the S1 and the R1 is to continue. Let's have a look at cable. Sorry, that would be the 4-hour chart once again. Slight readjustment possible. At 1.2125. In this case, I would also be readjusting the S2 just a bit. At 1.1819. I think that also this peak here shows us the limitations of an upward movement more clearly. So let's lower that and place it on the 1.2345. Let's have a recheck also on the resistance lines. Okay. This one seems solid. I'm keeping that. And also here's a resistance line. Okay. They remain. Let's correct the labels. One point 2125 we have mentioned, 119 we have 11705 also stands. 1.24 now changes to 1.2345. 1.2660, 1.2985. Okay, that's it. Now for the time being, we maintain a bias for the sideways motion to continue between the 1.2125 and the 1.2345. On the other hand, we have to note that the downward motion has been broken here. So this becomes obsolete. On the other hand, though, note that the price action still supports the upward trend line and it's being put to a test right now. The RSI indicator is dropping, has dropped just below the reading of 50. It's actually at 49, 48.7. So, in my opinion, for the time being, on a technical level, it seems that the upward trend line is about to be broken. I would be maintaining on my bias for the sideways motion to continue. In any case, for a bullish scenario or for a bullish outlook for the pair, we would require the price action to rise and clearly have a clear break above the R1 1.2345, higher than this peak here. In which case, practically the door is opened for the 1.2660 all the way up. On the flip side, should the bears take over, we may see the price action breaking the upward trend line, breaking the 1.2125, and start aiming for the 1.19. Once again, for the time being, base scenario remains for the sideways motion between the 1.2125, a level which was tested to the downside here and to the upside here. On the flip side, to the upside, we note the R1 1.2345, a level which was reaffirmed by this peak here as it was able to reverse the upward motion of the pair to a downward motion. Okay. Let's have a look at USD/JPY. USD/JPY, which has broken the upward motion, and at this point I think it's going to be more useful to clear the chart and its trend lines. Let's just have a fresh look at the direction of the pair. Definitely this one. Now there's a downward motion, you can see that. And let's have a look whether we can build downward trend line here. Yeah, that's plausible. If we drill it out at this level, yep. You can see that we have consecutive lower peaks and lower troughs. Maybe there was a stabilization period here and here, and it would be interesting to highlight this. Let's draw here a channel. And there was a second channel as well. Sorry, my bad. So you can see that there were two channels and consecutive wide drops. So for the time being, I would maintain the view that the price action in the next 24 hours most probably is going to be moving in a sideways motion. We don't need this anymore. I would be, though, highlighting the collision course of the price action of USD/JPY with the downward trend line. Also note that the RSI indicator is slightly above the reading of 50. It's actually running along the reading of 50. It's at 51.04. That tends to imply that the sideways motion is to continue. Note how the Bollinger Bands have converged after widening here, have narrowed and are narrowing still, implying that volatility is slowly weakening, or actually has weakened already. Interestingly enough, we have some conflicting messages. We see that, say for example, the 100 moving average has a clear downward motion. On the other hand, though, we note that the 50 moving average has started to stabilize. It's easing its downward slope, while the 20 moving average has already reversed and it's going upwards. So more or less, I think we are moving into a stabilization of the pair. And we may see a reversal. It's a make or break position here, people. Once again, for the time being, we maintain a bias for a sideways motion, probably between the 137.50 and the 135.80. On the other hand, I wouldn't be neglecting the possibility of a bearish outlook, yet for that bearish outlook, given the downward trend line, I would require a clear breaking of the 135.80 and the price action to start actively aiming for the 133.90. Definitely for the bearish movement to be maintained as depicted by the downward trend line, the price action would have to reach a lower point than the S2, somewhere here. It has to form a lower trough. And I think that could be possible, but note how the price action was unable to do that in the past two troughs, which implies a stabilization. On the flip side, a bullish scenario could also play out, in which case we may see the price action rising, breaking the downward trend line, breaking the 137.50, definitely a higher peak than this one, and start aiming for the 139.65. Let's have a look at UCCHF. The sideways motion here becomes clearer. On the other hand, though, we definitely need to readjust our levels. We have to recalibrate. And this is going to be the new support line, a new resistance line. I think I'm going to be keeping this peak here. There's this one as well, but I think this is valid. Let's go and have a look at the support levels. We have to go way back. One support level is here. We're skipping the shows here and moving our next support level here. Yep. Okay, let's keep that. And readjusting the chart. Let me start with the first resistance line, which is now being placed at 0.9450. .96 stands, 0.9735 also stands. Let's have a look at the S1. $93.30. Sorry. Let's have a look at the S2. $92.10. And the last support line being placed at 0.9090. Okay. For the time being, we tend to maintain our bias for sideways motion between the R1 0.9450 and the S1 0.9330. The RSI indicator is running along the reading of 50, implying that the sideways motion is to continue as we have a rather indecisive market. I would note also the narrowing of the Bollinger Bands, which exactly reflect the lowering of volatility. Nonetheless, should the bulls take over, in case, say, for example, that the US dollar strengthens, we may see the price action rising. I would require a clear break of the 0.9450 and the price action to reach as high as the 0.96, as we had practically a peak here. On the other hand, should the bears take over, we may see the price action dropping, breaking the 0.9330 and start aiming for 0.9210. Let's also delete the trend lines, which are no longer relevant. Once again, the upper limit of the current sideways motion is the R1 and the lower boundary is the S1. Let's have a look at the Aussie. AUD-USD in a sideways tight range-bound movement again. Yep. Let's clear up a little bit the charts. And at this point, I would like to have a better view with more historical data. Let's drill out to the daily chart. It's a beautiful level. Note how the price action in the daily chart dropped practically since midst of September up until the 11th of October, and then reversed, starting to go upwards with some stabilization in play for the past 3 days. In my opinion, there are still bullish tendencies here, and it's evident from the RSI indicator on the daily chart. 0.68 could come under threat. And let me explain what I mean here. And the second one. It's going to be interesting. I think once again the pair is in a make or break position. It seems about to be stabilizing. On the other hand, though, there still seems to be some bullish tendencies left within the pair, given the RSI indicator. It's interesting enough that the 20 moving average has risen and has broken above the 100 moving average. Definitely has broken above the 50 moving average. Let's have a look. Yep. And if we adjust also the second one, place it to 100, we see a reversal of the direction implied here, both by the rise of the 20 moving average, the steep rise, which has broken above the 50 and the 100 moving averages. Yet the narrowing is indicative of the bulge bands, is indicative also of low volatility. Let's drill back to the 4-hour chart. So for the time being, we tend to maintain the bias for a sideways motion to continue between the 0.6795, 0.68 would also be valid, and the 0.6640. Should the bears take over, I would expect the price action to drop, break the S1 0.6640, and start aiming for 0.6545, if not even lower, paving the way for 0.6385. On the other hand, should the bulls take over, we may see the price action rising, breaking the 0.6795, and aim, if not even breach, the 0.6915. Let's have a look at USD CAD. Okay. The pair briefly tested the 1.3685, which held its ground. So we're going to have to correct this and turn it into a resistance line. This would be a great support level. And it's placed at 1.3230. Let's correct also the labels. My bad, I deleted the level which was placed at 1.3975. Let's replace it. There you go. It's a beautiful chart which takes advantage of both the high point and the low point of the chart. We could easily adjust also and place Fibonacci levels here. Going to do that later on. 3685 now becomes the first resistance line. 3570, the first support line. 1.3395, the second support line. And the final support line is being placed at 1.3230. Let's have a look at the Fibonacci levels. Starting with the peak, going all the way down. We're pretty close. Okay, the Fibos here have a difference from us. At the S1, the R1 is pretty close as well. So practically the only thing which is being questioned here is the S1. Let's have a second look at that. The FIBO had a level here. We have a level higher. No, I'm keeping mine. Has more touches anyway. Okay, let's delete this. So for the time being, we see that USD CAD has hit a ceiling at 1.3685, has interrupted the upward motion as it has broken the upward trend line, and the pair tested against twice actually the R1, which held its ground. I'm switching my bullish outlook in favor of a sideways motion for the time being. And I would note though that at this point we have the RSI indicator, which is still pretty high. It's at 66. Also note how the 20 moving average, okay, we have to readjust the moving average a little bit. I'm going to be shortening them. We have the 20 moving average, the 50 moving average, and the 100 moving average, all of them pointing upwards. But the moving averages are follows, aren't they? They're not leaders. They're not foreshadowing practically the development of the price action. For me to see a renewed bullish interest, that would be translated in the price action if USD CAD's price actually breaks above the 1.3685 and starts aiming for the 1.3805, a level which provided resistance here, here, and here. Nothing less. As long as the price action remains below the 1.3685 and above the 1.3570, I still maintain my bias for a sideways motion to continue. Now, should the price action fall and break the 1.3570, start aiming for the 1.3395, providing support here and resistance here, support again here, that would be a clear indication that the bears are taking over. And I know it may seem to be a wide distance to cover, but have a look at this, and at this, and at this, and here, and here. So the pair is able to generate substantial volatility. Maybe not at the present stage, but in general. So it would be able to cover the distance mentioned. Okay, sideways motion being created with a small note here that bullish tendencies could be renewed. Let's have a look at the Kiwi. Kiwi with a very side narrow and range-bound movement between the 0.6380 and the 0.6290. We tend to maintain that bias. Should the bulls take over, I wouldn't be surprised to see the price action rising, breaking the R1 and start aiming for the R2. On the flip side, should the bears take over, we may see the price action dropping, breaking the 0.6290 and start aiming for the 0.6155. The RSI indicator is running along the reading of 50, also implying a rather indecisive market, practically reinforcing our bias for the sideways motion to continue. Let's have a look at oil's prices, which we have mentioned in the fundamentals today. Now we see that there was a bearish movement, but the bearish movement has hit the floor at the 72.35 support line. It was a very valid level we have set here. And in my opinion, that shifts the downward trend line to the right. So I would say that there's still wide bearish pressures in play here. And in my opinion, given that the RSI indicator is also at the reading of 38, which is pretty low, I'm still bearish on this. I wouldn't be surprised to see the price action dropping, breaking the 72.35 with the next possible stop being at 69.25. Let's have a look where the S2 is actually being based on. So we're basing the S2 on this show here, which was practically a year ago. That's a very low level for oil's price. So the question is, will oil bears have the courage to actually drive WTI's price to a new one-year low? That would be a very interesting question. Should the bears have cold feet though, and the pair stabilizes given that it has hit a floor at the 72.35, we may see the downward trend line being broken clearly this time, not just shifted to the right, but clearly be broken. And in which case we may see the price action remain between the 75.40 and the 72.35 support line. On the other hand, should the bulls take over, once again, I would expect the price action to break the downward trend line, but at this point I would require also breaking of the 75.40 resistance line, a level which was tested to the upside here and to the downside here. So it's pretty valid as well. Now should the R1 be broken though, the next possible stop could be at the R279 resistance level. That should be it. So from all of us here at IronFX, best wishes for solid trading.
Hello everyone! In today's video we're going to look at expert advisors. Expert advisors are computer programs that run on the MT4 trading platform. By using algorithms, EAs are able to monitor and trade financial markets. Basically, EAs are used to automate trading and find opportunities. You can program the software to initiate and execute trades for you by using the parameters you set. For example, you can use an EA to monitor a few key markets. The expert advisor will alert you when it finds a potential opportunity. Then you can program it to carry out trades for you and open multiple positions every day. However, there are some benefits and disadvantages that you should be aware of. As trading is automated, an expert advisor removes the emotional factor from your trading. This means that your fear of loss or greed for more profit will not affect your trades. EAs can reduce stress levels because it takes away the anxiety of trading. Therefore, you can set your trades for the day and do other tasks instead. An EA can run on any market that you can trade with MT4, taking lots of information into consideration, such as price movements and news announcements. Our brains are not fast enough to match the speed of an EA. One disadvantage of expert advisor is they cannot respond to real-time news. They basically ignore factors that cannot be programmed into them. If you are at your computer monitoring the news, you can avoid making a trading mistake after a news release, but the EA will keep trading if it's set to do so. Even though the EA can deal with more variables at once that humans can, it can only act in the way it has been programmed to. There may also be times when you need to interrupt the EA to avoid a big trading error or take an opportunity. Whether you use a third-party EA or create your own, it's important to backtest it over various timeframes in a demo account before using it on live markets. A demo account does not risk real money and lets you see how the expert advisor performs for you. You may find that it works well for you on some currency pairs, but not on other pairs. Simply do your research before committing to using an expert advisor. There are good EAs out there, and some traders achieve year-over-year gains using an EA that trades automatically. Thank you for watching.
Alright, I bet you guys can see my screen clearly right now. Alright, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular trading chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K, and then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K, and now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings are more than 80 will indicate the price is near its high, and readings that are above 20. So readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case as stochastic, how can they identify in terms of divergence, right? So in the first few slides, you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we're looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Okay, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right, so let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yep, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see that price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candle wick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to and resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. We can see that there is a support turn resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. It's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, the upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards the resistance on the bigger time frame, like on the weekly, with price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a Nike tick reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 2, 7, 2 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see, is there any chance of divergence? No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing QE Aussie QE in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. It's a Franken. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry, 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on the H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting, interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. CAD yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. still trying to climb upwards. I'll say for the short time being, it'll be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.
Hello everyone, my name is Emily. In today's video, we will look at trading strategies. So what is a trading strategy? Basically, it's a fixed plan that is designed to achieve a profitable return by going long or short in markets. There are four main strategies. These are day, position trend, and swing trading. Let's look at each one of these. Day trading is the most well-known trading strategy. It involves buying and selling assets within the same trading day in order to profit from rapid fluctuations in prices. No trading position is held overnight, so this minimizes risk associated with overnight movements in the market. Position trading is a famous long-term trading strategy, and it involves buying and holding an asset with the expectation that it will increase in value. Position traders tend to ignore short-term price movements and rely on more precise fundamental analysis and long-term trends. They expect a higher profit per position than day traders, but they also take on greater risk due to the length of time the assets are held for. Trend trading is a strategy that involves analyzing if a market is in an uptrend or a downtrend. You go long if the market is trending up, and you go short if it's trending down. Trend traders remain long or short until they believe the trend has reversed. This is regardless of time frame, which means the strategy can be used for short, medium, or long-term trades. Finally, let's look at swing trading. This focuses on charts and technical analysis. Swing traders look for trends and patterns in the price. Positions are usually held from 1 to several days, longer than day trades, but generally shorter than position trading. Unlike trend trading, swing traders will often take a position against the overall trend. Thank you so much for watching us.